Good morning, traders. So, did you sell in May? If not, this is your last chance. It's the 31st, the end of the month, and we're starting a new month. And yes, if you didn't sell in May, you're going to be suffering what historically they say comes. We'll see. So far, what we've seen is a market that is resilient, refuses to go down. If you can call it a crash or a mini crash or a momentary crash where the prices went down for one day on the Trump Comey news and then just turned on a dime and ripped right back up to new all-time highs. So if you don't think it's a Trump rally, it's certainly, you have to face the fact that it's a Trump rally, and what's going to stop it, who knows. Anyway, the markets are still in an uptrend. They're up this morning here. S&Ps are up 4.5 points. You can see a little consolidation that's going on here, and that's actually bullish, for prices to go sideways after whatever it is, 5-6 days straight up, and now going sideways where buyers continue to come in as if they're just waiting for prices to move even higher. So yesterday there was a little dip. Prices came back. We've got, let's spread it out here a little bit. Got a little bottoming tail bar going there. And right now it's green. We don't know where it'll end by the end of the day, but I'm putting at least a short-term line in the sand under yesterday's low. And this, what I've marked off here as minor support, is the old high. I'm saying what was resistance becomes support. And let me just show you something here as to, it's something that we do pay attention to, but it's a bit subjective because the real support is what's directly to the left of prices. And just let's look at an intraday chart here from a little bit longer term perspective so you can get the meaning of what I'm talking about here. So that minor support area, as we look at the chart, would be here. Right? That's this area right here, right there. And so what you're told is, well, that what was support becomes resistance, but in reality, and this is something that a rule that I came up with years ago after seeing prices being able to just slash through an area like that, like it's not there at times. So once prices trade below that area and back up above that area, I consider it neutralized or used up. So what do we look at? Well, what's directly to the left, which makes the most sense. And as you look at this chart, right here, this area, right, that's those few days right now that are going sideways. So if this did start to break to the downside here, we have to look at what's to the left right here. All right, those little stopping points, whether they could actually stop prices from moving down. Now, when prices move straight up like this, as you can see, right, there's the straight up move. There's a little bit of overlapping of the daily bars right there. But when they move straight up with that kind of momentum, they leave little to no support underneath. And as time goes by, and here's a time concept with support and resistance concepts. As time goes by and prices move further away from these little minuscule reference points, they become less and less significant. So while everybody will be looking at this, because that's technical analysis 101, what was resistance becomes support. If you look at what's happening intraday and you take note, I don't know how long this will go sideways, or maybe it'll go higher, and this will become new support. But as this goes sideways, this becomes more and more significant as a reference point of support, because that's what's happening. The support is being created. So if we should start to break to the downside, these little spots here aren't going to serve much in the way of support for the S&P. So just keep that in mind. Right? And if you look at, well, we could look at the spiders, but it's going to look a bit different because it's not a 24-hour chart. However, you can see what I'm talking about even, a little bit better, because as you look at that area, so we look at, okay, what was support, what was resistance becomes support. There's your little area right there. That's right here. However, look at what happened as prices went up. There's nothing. Right? Prices went below this area. They went back above it, and you got these little stalling points right there. So as prices go sideways, and again, it's if it breaks to the downside here, it's then left an area of overhead resistance. And so if I look at a larger area of resistance and little tiny areas of support, right, it's unlikely that those areas of support will hold. Now, we do have rules about, like, if it comes down here, now the assumption is getting down here. Well, what if it creates new support? That's possible. So we have to have rules to make adjustments as new data becomes available, new price structure. Let's take a look at the NASDAQ, up at new all-time highs this morning. Pretty much, going it by itself, which has been the norm. But it's moving up there, so you now want to, mark off this new support area right there. Now we all know the weeklies are up, so the weekly trends are up. So we're focused on these smaller time frames since prices have moved up so much significantly as to whether they just continue their uptrends or whether they possibly break. Okay, and oil back down this morning. Had that run and nasty drop, try to hold, and now it's breaking lower. We'll see if it can stall there for the moment. And bonds there, they're just stalled here today, but they've been getting better. And I do want to go to the weekly chart for this because, they're coming up, or they are up here at a significant resistance area. And so I want to see if they actually can break out. Now, as we look at markets, you look at the S&Ps that are up and the NASDAQ that's up. If you look at the Russell, it doesn't look so great. I mean, the weekly is sideways, and which way can it catch up, or is it going to drag the market lower? Biotech had a nasty day yesterday. We're going to see if it can hold the 200-day right there. That's a simple moving average. You don't need any other. And you have, the other side, the transports came back from the cliff and held its 200-day, and now it's up into this resistance area. So as we see these various markets that overall, most of them have either come back or they're doing well, they look like they can go higher. Don't think that there hasn't been a lot of damage going on in this market, because there sure has. You've got the narrower part of the NASDAQ, Amazon, which touched 1,000 here pre-market. You've got your Facebook and NVIDIA and Tesla, which has done great the last few days. And those stocks that have been the favorites continue to be. So it's a rather narrow market that's participating and doing so great. And then you look at stocks that are getting decimated, like Akamai, right? And GWW, Granger. Let's look at some of these downtrends, and I've got a huge list of them. And I go to them on down days, shorting them for further downside. But there's a lot of damage out there, devastation. Time, CHRW, and so I can go on and on and on and show you these stocks that are getting crushed, and we all know about retailing getting just decimated because of the 800-pound gorilla, Amazon, just crushing everything, and I'll tell you, I'm an Amazon junkie, so to speak. In that it's just so easy, you got your Prime account, you go online, whatever I need, click, 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 they send it to me in 2 days. It's just an amazing company. So, it's not like you see a stock that's performing like this and you're saying, like you go back in the day, Krispy Kreme or Snapple, and say, oh, they sell iced tea, or this one sells donuts and the stores are worth, millions of dollars. Well, Amazon sells virtually everything, and as you've probably heard, they're looking into selling even pharmaceuticals. So just an amazing company. I guess we just have to wait for a real market correction to buy this. Maybe it'll be down 20 or 30 or 40% at some point. Anyway, have a great trading day. We'll talk tomorrow.